Media ETF. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we go here to the sectors, and this is in the communication services. And this is the ETF, the Invesco Dynamic Media ETF. PBS is the ticker. So we do have a 56% move here from the low. 6%-ish pullback so far. So let's jump into the charts. So these are weekly data points, big picture, and we do have time cycles. They have been rather, decent at, calling the primary momentum. We are still part of the rising phase. If you look at the previous times here, we peak a bit early. Here we do actually peak a bit late, but we do have a bit of a rocky period as it comes towards, the top of the time cycle. In this instance, we did peak here, but this is where, the easy gains stopped. Then we start to get very messy, and then we have a sell-off. So given that, the easy gains have most likely been made here for PBS, so we are approaching a part of the time cycle that could really lead to, significant weakness or a messy period. And if we zoom in a bit here, we certainly have had, many months now of us more or less moving sideways. When you have a massive consolidation at a low level, it will be obviously interpreted very different than after a monster move like this. Which means that it is, of course, fully possible that we will have a breakout, in the bullish, sense of the word. But we have had a big move here, okay? So it's not like, we have like deep value here and we have been consolidating for a long time and, it's the deal of the century. I mean, this is at a high level, it just is. Going here to the daily data points, the red 200-day moving average has been important. Here we test it, bounce. We are in this price range here, right above us. We see this is a place where the bulls struggle to find new buyers. So that is definitely something that the bears are noticing, though they haven't had much success yet. We have seen substantial deterioration here in the momentum, MACD, on the weekly data points. When we go here to the daily data points, when we look here at the distance between price and the purple 20 and the green 50 and the blue 100-day moving average, we are at a level that has, resulted in some smaller pullbacks in, the past. When we go here and look at, the correlations, weekly data points, we do have a 95% positive with the S&P 500, 97% positive with the communication services ETF, IXP, that's, the global version. With the 10-year yield, we have a very mild minus 18% negative correlation, but a rather strong minus 83% negative correlation here with the dollar. So they do actually move rather opposite each other, meaning the PBS and the dollar. On the daily data points, we have, a very weak, almost no correlation with the S&P 500, only 17% positive with the IXP, minus 13% here with the 10-year yield, and 21% positive correlation with the dollar index. So definitely some differences here when it comes to the statistical correlations long-term and shorter term. You see here that the correlations have really deteriorated during this massive consolidation phase. Okay, so now let's look at the seasonality. So over the last 5 years, November, December, and January have been really strong. It's been good months for this ETF. Over the last 10 years, then November is one of the strongest months. Closes higher 78% of the time with an average 4.5% rally, which strongly suggests that the odds of a breakout has increased. Over the last 17 years, November and December are very strong months. So yeah, the coming 2 months are very strong. So the seasonality definitively pushes me in a more bullish direction. Here we have the trend lines. We did try to break above this descending diagonal trend line, but we did fail. So the technicals here are sending a bit of a different message. And when we compare the S&P 500 with the PBS and look at the price earnings, then the price earnings of the S&P is minus 50% below the PBS. So yeah, the PE is really stretched here. Yeah, the dividend is 0.52% for the PBS, much lower than the S&P 500, which is at 1.28%. So the problem here is that it is very messy. So we do have a long-term consolidation, but the context is a big deal. This is the move we have seen, okay? A huge parabolic rally, then we consolidate. Yes, the seasonality for the coming months is bullish, which reduces the probability that we'll see a major breakdown during those months. But here is the big caveat when it comes to these kinds of expectations of the market, is that, so the expectation is that due to the very strong seasonality, we will not see a breakdown in November and December. That also means that if we do see deterioration in those months or leading up to those months, that's when the bulls are really going to panic, because that is completely unexpected. People are now complacent, they feel safe in the PBS, but there will be full-blown panic if something unexpected happens, because that's a very key part of the markets. It's all about expectations. And that's why you can have those paradoxes where you have, as an example, let's say you have a stock where everything looks bullish. It's deeply undervalued, it's at technical support, the seasonality is bullish, so the stars have aligned themselves. But then you see that it completely falls to pieces. The reason why it does that is because people completely panic, because when the stars are aligned, and notwithstanding that we do see a sell-off, that's when you could have like some extremely bad news come out that the big fish have just heard about. But yeah, it's just something to think about.